So, ladies and gentlemen, we're in our last session, and I've been promised by Klaus, who's going to take us through on the next spotlight session on digital financial services and green financial inclusion, that is going to be very interactive and lively because we are almost stretching it. Thank you very much, Klaus.
So, yeah. I would like to finish this day, I'd like to share with you where we stand with regards to research on digital financial services and climate change. So let me just get the clicker. So this is a project that we just have started. So I cannot give you any findings or any conclusions, but I still thought, since we've heard throughout the day that mobile financial services, digital financial services, fintech comes up, that we're actually working on this and try to find linkages between digital financial services and climate change, especially as it relates to financial regulators. So we have seen around the globe that there are interesting business models that use digital financial services for both purposes. One for increasing resilience, and we've heard a reference throughout the day with regards to these business models. But we also see that DFS, digital financial services, are used for mitigation. So what we've done in this research is to identify these business models and just collect them. That's where we are. We haven't gone further. What we plan to do going forward is to conduct interviews with these business leaders and also interviews with members of our DFS working group. The goal is to see, is there any implications for regulators that go beyond enabling digital financial services? So we just want to see if there is something else they could do to make this specifically relevant to climate change. So let me start with giving you a flavor of the business models that are out there for building resilience. And we've heard this. So the first big bucket is DFS for insurance. And those are examples, right? So one is Blue Marble Insurance. So they offer an index insurance product that uses satellite data and sensor technology to really surveil weather phenomenon, but also crop health. So they can measure rain, but also through aerial sensor data, but also ground sensor data to measure plant health. So thereby offering this index insurance that is links payouts to a certain threshold of a weather phenomenon, for example, a certain amount of rain that falls or doesn't fall, whatever it is, then payout is paid without the insured need to any claims process. That allows the insurance company, but also the customer, save time, save admin, and those costs can be passed on to the client. So that makes the whole thing cheaper and therefore more accessible to smallholders which use this Blue Marble insurance. Another example is this agriculture and climate risk enterprise, Acre. It's a for-profit company that provides this index insurance for smallholders in Africa. Same thing, satellite and weather surveillance, and they use mobile money for paying the premiums, but also for paying out the premiums. So some weather event happens, payments are triggered automatically, the insured poor person gets the payment. It doesn't have to prove that there's actually any damage. So this is convenient and increases inclusion of people that otherwise would have no chance of being insured. So the last thing, I think BIMA is also active here in Fiji, but they're also in many other parts of the world. It's PayGo Health Insurance. BIMA connects telcos with insurance companies, but they are neither. They are neither an insurer nor a telco, but they just do product development and daily management, and people that have a phone subscription actually can pay their health insurance through deductions from their prepaid airtime. So this is really pay as you go. And that offers a low-cost solution of health insurance that otherwise would not be possible. And this is important because climate change also has implications on human health. So what all these models have in common: reduction in cost, high customization, and thereby an increased safety net across poor populations. So this is a promising business model. The second part, and again, this seems now a repetition, post-disaster mobile payments. We can keep this short and sweet. Mercy Corps provided e-transfers after disaster struck in the Philippines. Those were unconditional cash transfers that could be provided to people affected. And here this also happened in Fiji, as we've heard before. So the question is there a role for the regulator? So I mean, one thing we see is having mobile money and having digital financial services in a country, that's important. But is there anything else the regulator can do to make this happen? And we're not quite there yet. We're looking at it. My sense is that if disaster strikes, the question of are there enough agents, are there enough cash out points for people to actually get to the money, still will have to be solved. So we'll keep you informed. Stay tuned. We really look at what the regulator can do to make these payouts smooth and functional even when there is a disaster. And so the last point on resilience I'd like to quickly raise is Sompo in Japan that use a derivative insurance using blockchain. Disclaimer, this is still in the testing phase, so we can't really like shout success yet, but just very quick, derivative insurance is something like index insurance for insurers. So it protects the insurer from a catastrophic event that would have them basically go bust because they have to pay so much. And the blockchain is able to manage the entire process. First, can the insurer avail of this derivative product, but also are the insured entitled to get the payments, and then the blockchain actually with smart contracting can automatically pay out. So the system manages itself. Such a blockchain self-managed system improves efficiency massively, and that also introduces cost savings. So we'll put it there because we think that the potential of it is enormous. However, let's acknowledge that this is not up and running profitably yet. But we'll keep you posted on how this goes. And so the second bucket is digital financial services for mitigation. And maybe the most famous example here is Ant Forest. So this is this rides on Alipay's Ant Financial's DFS platform in China. And they have invented a gamified way of changing people's behavior from high carbon to low carbon alternatives. So people that use this digital financial service platform can, in a gamified way, collect points that grows virtual trees when they do something that benefits the environment. So they walk to work, they get a point. They take the bus instead of taking the car, they get a point, and in competition with their friends can grow these virtual trees. What happens once they have grown this tree is that Ant Forest plants a real tree in the Mongolian desert. So the numbers are staggering as only China can produce, right? 200 million users, 150,000 tons of CO2 saved, and 1 million trees have been planted. And that's how that looks from above. So you see that they really go there and make these plants grow in the desert. So this has an impact. So even though this is a CSR activity, I suspect Ant Forest collects data on the people that do that and then somehow will find a way to monetize this data. This is just my guess, so this is not disclosed. But nevertheless, the impact is significant. And I think we have something to learn from this experience. And so then there's the last big point is PayGo Solar. So this is data from the World Bank that shows that 130 million devices home solar devices off-grid. So home solar devices have been sold up to date, which is 17% of the global potential market. And it also, this PayGo Solar attracts investors. In the last 2 years, $500 million have been commercially invested. So that brought, you see the impact, more than $5 billion US dollars into savings in households, millions of tons of greenhouse gases avoided, and also millions of people that actually can support income-generating activities with these PayGo Solar models. A side product of this is that users report improved health. For example, there's less respiratory disease, and also burns and eye issues, which always happen when you resort to kerosene lamps. So this is a win-win for everybody. So the example that we looked at is Zuri. Basically, they sell these PayGo Solar systems, but give the customer consumer credit. The consumer pays an installment fee. The company does maintenance and repairs. And then the consumer repays this consumer credit through mobile money installments. When they don't have money, the system shuts down, so they can't get to the energy. So this is a system to secure for the company that the money is actually paid back. And so the system produces 8 hours electricity a day for light and mobile phone charge. Everybody saves money, reduces emission, energy spending cuts by 50%. So win-win for everybody. So this is the wonderful things that happen when a company does that. And so let me wrap up here by what we want to do with this research. So the first thing, we want to look at what can regulators do, right? So what is very clear is that having an enabling framework for fintech and DFS makes things possible. We always talk about the transformative power of financial inclusion. We talk about the transformative power of mobile money. This is an example. Mobile money is no end in itself. Financial inclusion is no end in itself. But people that have access to these services can then enjoy energy access. So this is where we see the power of financial inclusion actually unfold. And it's good for the environment. So this is, I think we're starting to reap the benefits of financial inclusion, and this is a prime example. We also see, so this is like initial observations, that as we look at these business models, the reason and need for collaboration, cross-sector collaboration of various ministries and authorities increases. So for the insurance sector, it's agriculture and also Ministry of Environment. So these things overlap, and an increasing need for collaboration can be predicted and already seen. But so there's one question that we're trying to address with this research, and is the one, is there a role for financial sector regulators that somehow can, that they can play to increase the demand or the supply of these services? And the answer is still outstanding. We hope to be able to report back once we have the results of the research. Next steps, we'll finalize the report at the end of this year, early next year. Then we'll present the findings to our Digital Financial Services Working Group in March 2019 in the Bahamas. And then we'll see. Then we'll decide, take the next steps, if we will integrate this topic into AFI or how we will integrate it to the topic into the AFI work stream. So this is yet to be decided and will depend, I guess, also on the findings. So with that, let me wrap up my presentation, but also wrap up the first day of this conference. And so I think Eliki has some final announcements for the dinner. Thank you.